Welcome back, traders and investors. We have Mark Melin on the line. He's the author of ValueWalk and an alternative investment practitioner. And Mark's also an adjunct instructor in managed futures at Northwestern University, Chicago, and has written a few books on the markets. Mark, how you doing today?
Doing great, Joel. How are you?
Good. Well, we had some news yesterday out of the ECB, out of Draghi, and he's going to try quantitative easing over there to see if that works wonders like it did here in the United States. So I know you cover that closely. What's your thoughts on that?
Well, I think as an investor and a trader, you need to understand that this could result in a shift in market environments. And what I have always advocated in the course I taught at Northwestern and a lot of my writing is understanding what market environment you're in and what investing and trading strategy relates to that market environment. Now, relative to the ECB, I think there are two things that are happening here. In the United States, we're pulling back on quantitative easing. At the same time, the ECB is going to start to dive in. So I think this represents two major market shifts. And yesterday there were a number of hedge fund traders who were talking about how they're going to play these shifts. And one of the things I like to do is to keep an eye on the top hedge funds. I've got about 20 hedge funds that I really pay close attention to. And a lot of people are starting to adjust their positions relative to what they perceive as a macro change in market environment.
Okay, well, first of all, what are some of the top hedge funds you like to follow? How do you follow them, and what kind of changes did they make?
Well, in terms of the top hedge funds, I like to get a diverse group of hedge funds because you can see all their stock picks. That's public information, and there are services that track that. For instance, there's an index that's called the iBillionaire Index. It's one of the two indexes that tracks the top hedge fund traders. And you hear a lot about hedge funds underperforming the market, and as an aggregate, there are so many of them. Yes, they do. But if you isolate the top traders, they typically do better than the mean. And if you look at the iBillionaire Index, for instance, the iBillionaire Index was up 4.5% some in August. The average stock market gain wasn't anywhere close to that. So basically, the way I like to do is to take each of these strategy types and correlate it to a market environment. So in hedge funds, you have activist investors. That's probably the most alpha generating strategy of all the hedge fund strategies, and it's going to respond to much more the manager and their actions than beta market factors. So in that narrow sleeve, who are some of the guys I like? The guy who's getting the most press is Bill Ackman. Obviously his Herbalife, trying to drive that company into the ground, is an interesting thing to look at, and also his allergen deal, which is essentially he had insider information. He knew that deal was going to happen before that information was public, and he traded on it. Now, it's going to be fascinating to watch to see, if the SEC allows that, because I think ultimately that's going to usher in a new strategy type, and you're going to start to see that strategy being executed by guys like Icahn. But in terms of who I like in the activist strategy, I sort of look at it like, Ackman and Icahn. And if I had to choose between the two, I would definitely choose Icahn. There's going to be an opportunity for investors to do that. Carl Icahn's company is publicly traded, and Ackman is going to go public. So I think there's going to be a big buzz on Ackman stock, and I like to sell on equity highs and buy on lows. I'm a buy on the dip kind of guy, invest in a drawdown sort of a scenario. So I think ultimately when Ackman goes public, there's probably going to be a fair amount of hype. That's when I'd sell Ackman, and I'd be buying Icahn, Carl Icahn Industries.
So if you had to rank them all, you're putting Icahn right at the top. Who would be your top five? Would you have Ackman number two as influential hedge fund managers, or would you have somebody else at number two? Who would be in your top five if Icahn's at the top?
Well, I think the way you have to organize it isn't like 1, 2, 3, 4, 5 in the linear fashion. You have to pick categories. So in the activist category, icon would be number 1. Then I look at a guy like David Hardy, Winton Capital. Are you guys familiar at all with Harding?
I am not.
All right. So Harding, there's a group of about maybe, 15, 20 hedge fund managers that have significant assets under management. Harding has close to $20 billion under management. He's a managed futures trend follower, but he probably has some of the most sophisticated algorithms of any managed futures trend follower that I'm aware of. And, it's interesting. In the Wall Street Journal, they had a letter. I don't know if you guys saw this, but a guy who was trading in the emerging markets wrote this letter to investors as he was closing down his fund. It was just scathing in his, he blamed essentially the market environment, which has been awful for that managed future strategy that Winton typically uses. But he blamed high-frequency trading on his demise. And his final letter, which was published on the Wall Street Journal website, was just almost hilarious in terms of how much vitriol there was in his verbiage. But so in the managed futures category, Winton's a guy to like. Ray Dalio from Bridgewater. I love his diversification strategy. I mean, in my mind, I don't think you could, if you had to rank, who's the top manager, Dalio or Harding. Those guys, they're just such equals. It's almost hard to rank him. But Dalio has a very good relative value sense of how he executes his strategy. So I like him a lot. I think an activist that you can follow is Nelson Peltz. He's a guy that, the big issue if you start to follow a lot of activists is getting into the trade before the price has essentially shot up to a point where it doesn't make sense any longer. Nelson Peltz is a guy you can follow, and he typically does well. Icon's another guy. They have an impact on the stock and on the management of the company. A lot of these activists, in my opinion, are sort of short-term, and what they do is they can get the stock price to move on a short-term basis, but when it comes down to it, the long-term impact, to positively change a bottom line, I think if you look at Icon's track record, it's pretty impressive. So there's some European guys I like. In terms of sort of the credit markets, Cheverini, you just can't beat that guy. He's up 19%. He has I read his investor letters quite often, and he just has such insight into the markets. And taking a look at all of these guys, a lot of people were anticipating this ECB move. I read a lot of the investor letters. I'm in communication with a fair amount of people, and it's being reported that this was a surprise. But Barclays essentially nailed this. They said that the ECB is going to engage in quantitative easing. They're going to be doing asset purchases. And they came out with that letter the beginning of this week, and then they announced yesterday that it was going to happen. Rothschild also had an investor letter where they essentially acknowledged that, not as concretely as did Barclays, but they essentially called it. They said, we're headed for easing in Europe, and I think so. With that as a play, you look at guys like Tepper from Appaloosa. He's changing his market strategy. And I think here, when you're an investor or trader, here's how you sort of have to look at this from a macro standpoint. Europe, if patterns hold on how the U.S. handled quantitative easing and how Japan handled quantitative easing, there are specific plays in Europe. There's a potential for Europe to outperform the United States. And we could be sort of making that switch in market environment. U.S. is pulling back on quantitative easing. If Janet Yellen stays firm and stays strong, there's probably going to be some volatility coming in the U.S. markets. But The good news is Europe, which has pretty much lagged the U.S., now might start to take a leadership role, and you could see some interesting plays in that market. I mean, particularly, in a rising rate environment, you have to start to look at where the plays are. You could see some plays. I think value stocks are going to do better on a relative basis than growth stocks. I've seen some different analysis from some of the hedge fund guys that say financials in certain sectors might do well. Consumer discretionary, particularly the high-end consumer discretionary stocks in Europe, can do well. Once they engage in stimulus, you have to remember this primarily benefits the wealthy. And if you look at the U.S. stimulus, if you were in that top 1%, you did very well, and a lot of the high-end consumer discretionary stocks benefited from that type of an environment.
What do you think of these European banks? Because we often look at the chart of Deutsche Bank and we can see where this stock was even just a year ago when it was up over $50, and it's trading down here at $34 now. And it looks relatively cheap to these U.S. banks, which have some of them have been really moving higher here. Some of the other European banks haven't been quite as weak as Deutsche Bank, but most of them are near more their lows than they are their highs. So do you think this is a good opportunity maybe to nibble into some of these European banks?
Well, I'm not an expert at analyzing banks, but I will say that I think the European banks are going to have a tougher time in the U.S. On a regulatory basis than will their U.S. counterparts. You've already seen that in some of the handling of these European banks. I mean, particularly a lot of the European banks, the restrictions they have in Europe are very different from the restrictions they have in the United States, particularly in terms of who they can do business with. And, you saw a lot of the banks get into scandals in this regard. But are they beaten down? Yeah. And you look at Ackman. Who's he going with to do his IPO, which is going to happen this fall? He's going with Deutsche Bank and UBS. So the people who are handling Ackman's business, and like him or not, I mean, he's one of the top activist hedge funds, one of the top hedge fund traders in the world, period. And he's choosing the European banks. I think that's interesting.
That's going back to Icon here, and Icon Enterprises, had that crazy run. I believe up to one. Yeah, God, what did it go up to? Went up to
like 147 or something. When everybody got Icon mania when he was doing everything, the stock went from like 100 all the way up to 147, and then pulled back down. We like to track like where the net asset value is on some of these, stocks, and the net asset value of Icon's holdings was around $80 at the time that it went to 150. Do you look at the stocks, Mark, there, and look at where they are trading relative to net asset value, and when that really trades at such a huge premium, do you look at it as like a shorting opportunity?
Well, here, in terms of Icon, I haven't done that type of analysis relative to Icon, but here's how I look at stocks. And this might be cheating, but I essentially look at the stocks my top managers are trading, both long and short. And it's important to have, in my opinion, the short component of a portfolio, because I think we're approaching a period of time where we could see a stock market decline. I'm not saying in 2014. My projections are more around 2015, and it's impossible to nail that exact date.
Right.
I think you have to start. If you're an investor, you have to start preparing for a little downside protection. So relative to Icon, like the way I look at him as a trader, he uses very low levels of long exposure. So his long exposure is typically under 40%, or is now under 40%. Now think about the returns he generated in the second quarter, and he did that with just 40% exposure to long positions. Most of the managers you'll see, will be 80%. Long. Even a long short hedge fund manager is, typically 70-ish. If you use 100 as the baseline for your measurements. So in terms of Icon and the value of the stock price, I would be buying him on a dip, because I think on a fundamental level, if Ackman's allergen trade goes through and the SEC allows that type of a trade, I think Carl Icahn is going to benefit dramatically. he may, my speculation is he's probably talking about doing a trade like this.
That would
That's unbelievable.
that would be a very dangerous precedent to set, though, wouldn't it?
Yeah, oh yeah, I definitely think it would. But look, nothing's happened. Where's the SEC on that trade? I wrote an article about some testimony in Congress from an SEC official who used an analogy, not directly saying Allergan, but essentially said that one component of that trade seemed to violate insider trading laws. Now, what I'm watching with the Allergan situation and Ackman is Ackman's attorney, a guy named Robert Kazume, who used to be the director of enforcement at the SEC. Well, he cycled through the government to Wall Street revolving door, was reported to be making $5 million per year. And he's earning that money right now because when the Allergan deal was first public, and it was revealed that Ackman had worked with Valiant and had insider information and invested in Allergan before that information was public, Robert Kazume, got up and he bellowed. I say bellowed, that's my interpretation.
Yep.
He said in the press, if anyone at the SEC has a problem with the Allergan deal, come talk to me.
Wow.
Well, no, the SEC hadn't even had time to analyze the situation. This was like the day after, if my memory serves me, it was the day after the deal was announced, and Kazume, he's like a bully issuing a challenge to the SEC that, essentially ruling on his own that this is a legal deal. So I think in part the Allergan, Ackman, Valiant three-way is going to come down to maybe the influence of Kazume. And I think if Ackman gets away with this trade, I think, a lot of credit goes to Robert Kazume for his influence in making that happen.
One final question for you, Mark. You said that Uncle Carl only had 40% in equities. Where the heck was the other 60%?
He revealed that, I believe it was in an investor letter, but it was revealed recently. I want to say it was revealed maybe a month or two ago. I think the exact number was like 35 or 37% long.
Wow.
I'd have to go back and figure out. Now, I did not see, a lot of times I get these hedge fund letters. They're typically very private, and you have to be very careful with them. I did not see the Carl Icahn letter to investors. I think I remember reading about it. It might have been in Business Insider or one of those websites that typically talks about the inside of how things work.
Okay. All right. We have had Mark Melin here giving us his take on the European market, what's going on with the big hedge fund players. Mark, thanks for coming on. We hope to have you on again.
Oh, thanks, guys. Have a good one.